welcome everybody. This is Chart Request Live. We do the show twice a week here on Stock Market TV, every Tuesday, every Thursday, 1 o'clock Eastern Time. Joined as always by my esteemed friend and co-host, Patrick Dunawilla of the Chart Report. How are you, Pat?
Stevie, I'm doing well. You ready to get into it?
Fast market.
Very
Fast market these days.
Why don't you give us a quick primer?
I mean, the primer is simple. I think that there's a great rotation going on. I would look at something like the Russell 2000 relative to large cap technology, because depending on, what kind of stocks you're in, this has either been a great, trailing 5-8 sessions for you, or a pretty frustrating one if you're in the Mag 7 stuff, right? Because not everything is catching a bid. In fact, the stuff that's been catching a relentless bid this whole cycle, you're now seeing some big profit taking in. So I think out of large cap tech, out of mega cap growth, out of the Mag 7, right? Out of this cycle's leaders, and now some love for small caps, banks, biotech, speculative growth, all that kind of stuff. So this is Russell 2000 versus large caps, bottoming the same level it bottomed at back during the dot-com bubble. So right back to the scene of the crime. And then we're getting massive momentum thrusts and breadth thrusts out of small caps on both a relative and absolute basis when it comes to the momentum thrust.
Good point. Good point.
I've marked this one up with a couple circles here. This is Russell 2000 again. And let's just pull up this rate of change here. Let's flip it to, say, I don't know, 5-day rate of change. And there you could see it. So I could zoom way out on something like this. We had a big momentum thrust during the November 2016 election, or right after the November 2016 election. We had monster momentum thrust, like nothing we've ever seen in history, coming off of the pandemic lows. And then we're having another one now, just as the Russell 2000 comes out of this perfect little base, right? So the momentum thrusts are firing, the breadth thrusts are firing, the relative trends are giving us signals, and the Russell 2000 is breaking out of the space that we've been waiting for it to break out of for, God, I don't know how long.
Right.
So I think the new playbook is more small, less big. And
what about more value, less tech, less growth? Is that
value, cyclicals, small caps, all that jazz? Yeah.
But Steve, do you think it's like kind of too extended in the short term? Do you think this is kind of a longer term rotation going on? Like, do you think this will last a few weeks, or did we just see it all?
Now we just need like confirmation from price, but this was the bang, right? You start with these like monster initiation readings, like the one that I'm showing in the upper pane here. And then in the short term, sure, you usually have some backing and filling or some give back. I mean, you make a good point. If you look at something like RSI, incredibly extended, it was above 80 just the other day. So yeah, let them dance a little bit, but dips are going to be bought, and I think they're going to be bought pretty aggressively.
You're saying the cat's kind of out of the bag for small caps. It's going to be hard to get back in.
I mean, here's how it goes sometimes. Like, look at regional banks. Like,
well, and how many false starts have we seen from small caps? And this one is, I think you'd agree, does not look like a false move. It looks like a very emphatic move, right?
This is a decisive breakout. It's as decisive as it gets. Just a monster move. Like, if you flip it to a weekly, look at these candles. So yeah, I think the trend reversal is in the books now. This is more about timing and picking your spots and picking the right vehicles, right? But yeah. I think we're entering a new small cap world.
Small cap renaissance. It's going to be small cap summer, huh? Do you think, for our viewers, do you think that's kind of the pond they should be fishing in then?
I do. Okay. I do.
It is amazing how quickly that base shaped up. I mean, we spent the last 2 years, pretty much all of it, in a 20% drawdown or worse in the Russell. And then all of a sudden we're down 10%, or I mean less. We're down single digits for the last few days. But it's amazing how quickly that base shaped up.
Yeah, I think all this choppiness, right? This monster base. What do they say, Pat? The bigger the base, the higher in space.
Got it.
This is the bigger the base part, and I think we're just embarking now on the higher in space part. So
I like it.
What do we got?
All right. Let's see. Let's start off with Mobileye. There's a small cap for you. I haven't heard this one since 2021.
Yeah, when it got bought out, right?
It did it?
Yeah, and then Intel spun it back out.
Really?
Yeah,
Wow.
yeah.
Very cool.
I nothing. This is
Nothing.
this is as bad as it gets. I mean, this is just a monster range. With a sideways, the downward sloping 200 day. The first line of resistance would probably come in somewhere around here at this AVWAP, but
Mhm.
I think you really want to get back above this shelf of highs here before you even kind of maybe consider liking it. And that doesn't happen until 33 and change. And then I think this one looks like a pretty good short candidate because
There you go.
yeah, if we
Oh,
break
I'm
these
sure it
pivot
looks like a
lows,
disaster on a relative basis against like the Qs or something.
oh, it'd be terrible. Yeah, because if you're not rallying, if you're a big cap tech stock and you can't rally in this environment, now that they're selling the big cap tech stocks, there could be some good shorts here,
Good.
right?
Great
In the
point. Yeah.
laggards. Yeah,
Yep.
that's the relative trend. Now, this is either don't touch or maybe set it up for a short and a break of these pivot lows down here in around 25.
Oh, Steve using the S word. Wow. Nice.
I'm not a shorter, but I just trying
No,
to.
your point's valid. So that's a no-go for Steve. Let's see, Celestica. Is it possible for a
Do they want
company
the
slash stock?
cryptocurrency?
Let me read here. Is it possible for a company slash stock to advance when there's rotation out of its sector? If not, all the chart analysis at that point would seem redundant.
Of course, it's possible, right? There's always going to be something bucking the trend or like a pocket of strength in a bad group or a bad industry or a bad sector. Yeah. Are you making investing or trading easier for yourself by trying to pick that one that's moving in a different direction than the herd that it's with? No, you're making things a lot harder, right? Right now, I could throw a dart at my regional banks universe and I've made money since last week, right? That's kind of how we want to decide what ponds we're fishing in. Are there a lot of fish there that I want to eat? Okay, let's throw a line in. Something like I think the way this question was phrased was even if the group isn't working, so what is this, large cap tech, I'm guessing? Yeah, so electronic components, though, that's a little bit different. And this is a mid cap. So I wouldn't put this is not in one of those groups that I think we have to worry about not working. Large cap tech right now is very different from small cap tech. Large cap tech is where we're seeing the profit taking. Small cap tech is doing just fine. Actually, they're doing kind of great. Look at what the ARK indexes have done, right? So I wouldn't worry too much about the pond that this is in. It's the AMDs and ASMLs and Taiwan semis and microns of the world and the Broadcoms and NVIDIA Supermicro, right?
Believers
Those are
for
the
the
ones
last
we have
six
to really
months.
worry about.
Yeah.
I wouldn't put this in that same conversation. What you do have here is a monster.com bubble base. We love these chart structures, right? So a big old base here. We already came out of it, in my opinion. Bang, got some sort of base breakout. A couple targets have already been hit along the way. The fib retracements probably won't help us at this point. So I think you either zoom way in here and look for something high and tight and play that back to the old all-time highs, or you just have to get really patient and maybe play a breakout to and through the all-time highs. I think you want to zoom in here, flip it to a daily though, and we could probably figure something out here. Yeah. Got a nice little shelf of interest here in the $50 range. You can drop a VWAP from the pivot lows from Q2 here. That's going to help you. And then I think you can get confirmation eventually when we reclaim this VWAP, which will start to run like this, just above price, right? And then eventually we get some sort of breakout above that VWAP, and that's your signal. So I think you could start to maybe accumulate, build a position against 50 here, using this VWAP as well, and then maybe get ultimate confirmation, finish your position when we reclaim the VWAP from the highs, and then you're trading it back to those old all-time highs, just north of 80.
I like it. I like it.
Strong
Uh,
stock, though. Really strong stock.
yeah, I mean, it really that base is really nice, but it could take a while to complete. And even once it gets there, is it going to just rip right through that overhead supply or take some time to digest?
Yeah.
Um, But let's move on. We got a hurricane stock, a natural disaster stock. Can you guess what it is?
You say hurricane stock?
Yeah. What stock do
It's
they always
Generac.
run? There
It's
you go.
Generac.
There you go. You know what I'm talking about, right? The hurricane trade.
Oh yeah, of course. I live in Florida.
So this stock always starts ripping when there's some sort of natural disaster. Um, they make generators, so makes sense. But
The chart looks great. It really does. I wonder if this one has a high short interest at this point.
I will check that for you.
Quite the drawdown, Pat. I mean,
I
wow.
know, right? I mean, what happened?
Let me
No
see.
natural disasters?
How bad was it? So Generac drew down, uh, man, 83% from the 2021 highs.
Wow.
But look at you now, Generac.
Only 5% short interest.
Yeah, all right. The base is in, just about. I think it's happening now.
Really like that. Yeah.
You want to define your risk here at these summer highs from last year. That happens around 155. We also have a pivot high here from May, also around 155. When you zoom in, you can see that we're, just flirting with a breakout now
Yeah.
through that level. And then, for me, this one's pretty clear. We have some zones here, but let's just put the fib on and see what it gives us.
And he's looking at this for a long term. So he's not doing the
Yeah.
hurricane trade.
Yeah, look, I mean, for now, I think make it prove itself a bit and get to 250. I think I like it more at 250. 355 would be next, and then 525. I mean, this stock could move. Like you said, Pat, it's got the natural catalyst with the weather that seems to come
I was
around.
gonna say, if only hurricane season we're approaching, right?
It is. We're in
I
the
know.
middle of it right
That's
now.
the point.
It's here. So this one, yeah, this looks great. I like this. Okay, against 155, you have your levels here.
I like it. I like it a lot. Nicholas, so I'm looking for an accumulation area. I started buying, not sure what ticker he's asking about here. Anyway, I'm gonna skip that one. Ready for wavies?
Wavy.
Long PBI breaking out of a 25-year downtrend.
Pitney Bowes.
Pitney
So
Bowes.
I lived in South Stamford on the water many, many years ago. And back then it was near, I forget what they called it, something corporate park, but it was like the Pitney Bowes headquarters right there on the water. It would stare across like the Long Island Sound to the other side of Stamford.
What are they? Are they a medical device maker? What are they?
So their headquarters was, no, it's like office supplies and stuff, I think.
Oh,
But the headquarters was like the view from my balcony. I would just sit and look at the Pitney Bowes building.
they would be headquartered in Stanford.
So PBI, yeah, look, there's a little something here. I don't love it, Wavy. You've done a lot better, my friend. Like you zoom out on this, it's kind of been a disaster since 1999.
Oh man, that's a long time.
Yeah, I mean, look at that. It was trading at $70 back then. So this one just seems to have, by the looks of the chart, some long-term problems. However, there's a trade to be made here. So I'm going to flip it to a daily just to show that the primary trend has turned. Right?
Yeah, I do like how that moving average turned up. Look at you with a moving average on. That's a
Yeah, the
lift.
moving average, see? You see it curling higher,
Yeah.
supporting or indicating a reversal in the primary trend. I think you're already pretty much, hitting your initial target with the automatic reaction out of this base. Right?
Yeah,
Hard
and then I saw
retest to shake a little go. And then it becomes a question of, okay, where do we get in and where do we get out for this trade? You want to trade it from the 38, which comes in right around 7 1/3 to about 1050 here. And that'll get you back to this like shelf of highs, which I really like, because the way I would draw this is kind of like this, ignoring this blow off here. So I think getting back to about 10 it is a pretty solid and logical target to look to.
yeah. Nice important psychological level. Let's move on to Hanson's, and this is the last one in the mailbag, and then we can hit the chat. He says long CR or OC, 6-month time frame.
All right, so is that Charles River or
Or
you said Owens Corning?
OC, yeah.
Okay, I like OC. Let's do that. No, what's CR though? CR is not Charles River. That's
CR, it's I
Oh,
want to say
Crane Company. Yeah. not enough history for me. So we'll do Owens Corning simply for that reason.
That's a good reason.
Owens Corning. Let's zoom way out here. Beautiful. The further you zoom out, the better. Just stair stepping higher. Since coming public back in 06. I would fib this base. Take it back to 2018. Boom. Kind of see how this has worked at the 161 here. Flip it to a daily. I think you could just trade this little like flag breakout.
Oh no, never mind.
I would mark this one up like this. Maybe I'm being a little bit aggressive with that little failure. But this was flagging, and then it broke lower, and then it gapped higher back into the range, tested the upper bounds, gave back a little. It's really tight here. I think you buy a breakout of this flag. That happens around like 180, and you play it to the next fib at 205. This is a trade, not an investment, right? That's not going to return you too much, but you can at least keep it really tight using some of these pivot high levels here, right? Like you have this level of interest that you could stop yourself out at right around 173. We're trading at 176 today. So the risk reward is still there, even though the profit potential is not huge. And if you want more, you could use that flag to get in. You could use this 261 as confirmation at 205. And then you could set your price target at 314 at the next fib. But we're at all-time highs, right? So there's no price memory there that I could look to and give you, a more logical target outside of just using the fib extensions.
Yeah. No, hey, you made something out of that. Didn't really see something at first, but I see what you're seeing. Let's see. Somebody, Alex in the chat says, Straza, since you said Tiger wins the Open, he's blown up.
How do you think I feel? I actually put money on him. And all the prop bets too. I just can't help myself. I love Tiger Woods so much.
All right. Let's start from the top of the chat. This one's from Donovan, Toll Brothers.
Yeah, Donovan, you're thinking right, my friend. Here's the thing, though. Here's the thing.
Mm-hmm.
This is such a beautiful chart. Toll, you guys know, pounding the table. I was using DR Horton for a vehicle. We were talking about, how there was a similar setup in Lennar.
Well, I mean, they all look similar, yeah.
We traded this failed top, and boy, did we trade it. God. So here's how we did it. We got in here on this scoop failure. I actually was already short puts, so I had to kind of hold through a really nasty drawdown where my puts had moved more than 100% against me, and I had to just sit there and hold them. Actually loaded up and sold more on this little hook here. Got into the calls when we hooked higher as well. Well, here's the thing. The trade ended. And, a lot of people are tweeting at me today. They're like, Straza, home builders. I'm like, dude, I'm out. I've been out. If I wasn't out, I mean, that would have been, listen, I may be crazy, Pat, but I'm not stupid. This thing just automatic legged right back to the upper bounds so fast. When you're in calls, right, there's a time value. Yeah. So the faster that move happens, the more money you make. If you weren't paying yourself there, I was in monthly calls. I paid myself immediately. I think I paid myself a little bit on this candle, Pat. Right. So, and I sold the rest at the upper bounds. I'm not in it. When you look at something like DR Horton right now, blowing through the upper bounds, I don't know if these are ripe for a longer term entry right here. Something like Toll, I could see it, right? Because you at least have the upper bounds you could play it against, even on strength here, maybe through 135. But DR Horton, I don't know if I'd be stepping in and buying this here today at 175. The chart looks great. I just think we can probably get it closer to 165. So I think these trends have been red hot. They all ripped from, the lower bounds of their RSI range to the upper bounds, getting overbought. Let them cool. Let them dance. Let them digest some of these gains of just the last 2 weeks. Yeah. And then put a trade on against the upper bounds of all these ranges. Right now I'm looking at Pulte Homes. I know the question was about Toll, but they all look the same. Draw some big horizontal lines at the upper bounds of the ranges. That'll be your entry for a longer term trade. But I don't think you have to do it today. Do you agree with me, Pat?
Yeah, no, I completely. I mean, it kind of reminds me of what our friend Brian Shannon says is where did it come from? And we're talking about one of the sharpest move we've seen in the last few in a while. So following the shit stocks discussion on Tuesday, What about SoFi? Breaking above the year-to-date VWAP and gap to fill
There's
right
more
above.
work to be done, but it's moving in the right direction. I like SoFi. This is a hot corner name. We have a special report on it, but it still hasn't triggered for us. We have our chart drawn like this. This is the big level, so about like 850 for us. The VWAPs aren't the most helpful in this one right now. I think we'll eventually, well, yeah, you could use this VWAP from the August or July 2023 high, right? Maybe jump it there. I really think you want this above 850. You want to see this channel finally resolved too, which you could draw in different ways.
Mm,
Right? It's not the cleanest, but there is definitely a channel there.
yeah.
Right? Get out of there before we have conviction that this is truly a valid trend reversal pattern. I think, with stuff like small caps and now a lot of the ARK index breaking out of rounding bottom patterns that look very similar to this, it's one of those situations where you can make a list and say, if this one's going and, completing a trend reversal and this one's completing a trend reversal and look at the base and this one breaking out, then it stands to reason, well, SoFi probably completes a trend reversal too. So I think the intermarket action for SoFi has been very constructive over the past 2 weeks. And you could see it here. SoFi's action has been really constructive since last week. But I would say another one that you don't want to buy here today, let them dance a little bit. Let them continue to kind of work its way out of this range or this downtrend channel and this base and get long on strength above 850. First stop, I think you could run it right back to this former support and bet on it turning into resistance now. That happens around 14.
Dude, excellent breakdown. And this is the seventh largest component in ARK F.
There you go, which looks fantastic, by the
Let
way.
me ask you this though, and this is kind of unrelated, maybe it's a fundamental question, but why hasn't a stock like SoFi been able to get going when financials have been so strong? I know it's not, I don't think it's in the financial sector, but it should benefit from similar tailwinds, right? Why do you think that is? Is it just because it's so growthy that that part weighs it down more?
Listen, they offer banking products and services. This is not a traditional bank, right? This is run by, and I think he helped found it too. The old CFO of Twitter. These are tech people doing banking things.
Yeah.
So this company's built like a tech company. It's valued like a tech company. It trades like a tech company. It's ripping right now.
Maybe it was overvalued like a tech company.
Right, it was. And it's ripping right now because interest rates are falling, right? But less because it's a bank, right? Because banks are really benefiting from rates falling, right? But so are speculative growth stocks. I think this one's moving more on the lower interest rates, but because it's speculative growth and less because it's a bank. It doesn't look like other banks. I wouldn't treat it like one. I would treat it more like a Zoom or a Peloton or a Chewy. It's
looks a lot more like those, doesn't it?
But I picked some bad examples. Maybe Square better.
Yeah. Okay.
Square. Yeah.
I mean, but those fit the bill too. That the question applies to those names too. PayPal, Square. Anyway,
Square's shaping up. Both of those. I've been looking at both of those charts lately. I'm not involved, but I've been looking. I'll admit that. Been looking.
All right, we got a bunch to get through here. Jonathan's asking about cash. Is that a
Cash?
stock or is that a crypto? Cash. Yeah, just cash.
That's one of those pawn shops, isn't it?
Oh my God. I think we might have found my favorite.
Or is it credit services? What is this?
What the heck? Jonathan, nice call.
Yeah, SNL.
What do you mean?
Savings and loan.
Uh,
You remember the savings and loan crisis?
is this a regional or?
It's a savings and loan institution, which
No, wait. So
not nearly as big of an industry as it once was, but these guys are still around.
wait, so what crisis are you talking about? I guess I didn't know what you're talking about.
This is like a credit union.
Oh, okay.
Pathward Financial. We fib it out. This base is about to go. Beautiful base. 66 is that level. 66 gets you to 87.50. And again, look at the RSI in this one. Incredibly bullish, just the momentum regime, right? Just tagging overbought all year. But it's RSI is at 78 right now. So again, it's not something I think you need to run out and buy today. could be patient in this market. I know everyone wants to rush in and buy stuff after the action that we've had last week. Just let them dance, let them cool off, let them come to you, pick your levels, set your alerts, right? Keep them on your radar. But don't go buy things after, 8 straight up days and, momentum readings in the 80s.
Excellent PSA. I think that's a really important thing to keep in mind right now.
Yeah.
Because that move we've seen the last few days, I think it does really get people excited. People are thinking about moving their portfolio, rotating, things like that. And by the time they actually push those buttons, it's over. It's a little too late. Mean reversion.
Moves like last week and early this week, they really brew up that FOMO within us all, right? Yeah. We're just humans. Yeah. And your friend calls, you're like, oh, I made all this money on the regional banks. Like, you want to run out and buy the regional banks. You don't have to.
Yeah. All right, let's go on to Adobe. Looking all right, little coil after a big move up that retraced a bad post-earnings move.
Yeah, look, the place to be buying Adobe, it's a great pick, by the way. Place to be buying Adobe was after this earnings collapse. Let's flip it back to the daily, sorry. Right here. Because what happened was, that was the last earnings report back in May. Thing fell, when you could zoom in and see it, fell like 6-7% over a span of 2 days. But what it did was it just checked right back into its base breakout level, which we love. Right, we had this level and this breakaway gap here, which was back in June of 2023. We completely round trip it, right? Print this top here. After almost getting back to the old all-time highs, right? Top it out, break it down, heads right back to the breakout level, hard retest, and then a breakaway gap and go. And now we have this high and tight flag right here. I think, yes, longer-term investors would have loved to get this at 436, but traders, I mean, there's something here right now. Again, I think we're going to continue to pick our spots in tech, right? Like, you want to stay away from maybe the ones that have worked the best. I was
going to say, I mean, this one, software as a whole lagged so much. This one hasn't even broken out yet. I mean, we can't call this a leader.
I wouldn't put this in that basket, right? Where I'm yelling about the Avago and the NVIDIA and the Supermicro. Yep. Adobe's not in there, which is a good thing, like you're saying, Pat. So I think you could run this flag back to old all-time highs, or at least these year-to-date or December highs from last year, 633.
This is one of those stocks that the market still hasn't figured out if it benefits from AI or if it's hurt by AI.
That's a great point, Pat.
On one point, you have, basically everyone, it's a utility for graphic designers and anybody creative. You have to, if you're an editor or something like that, a video editor, you have to have Adobe Premiere, or if you're a photographer, you have to have Adobe Photoshop. But now all those tools are, there's so many AI tools out there that could supplement them. And
you make a great point. And I think so far the trend has been, this is a $250 billion name. They got plenty of cash, great free cash flow. This company, big earner. The companies that have these big pocketbooks like Adobe are probably not going to miss AI because they have the money to spend on it.
They're going to figure out how to spin it so it works.
Right. So think about it. We heard Meta missed AI, and then they didn't. They are AI. Then we heard Google missed AI, and then they didn't. Now everybody's rushing into Google stock. Apple missed AI like 2 months ago.
Apple was a big
they
one.
Didn't, right?
Right. So
the trend has been, when the narrative is, oh, this mega cap growth company, the couple $100 billion valuation missed AI, that narrative tends to continues to turn out to be wrong about all these names. And I think Adobe will be the same way about the concerns that you're citing. Valid concerns.
Yeah. All right. This one, Mary said they just got an email in the mailbag from SMCI. Really important one.
Yeah, I'm probably going to stop myself out today.
You want to talk about its role as kind of in the broader market too, and what that
you don't want to see the big AI leaders roll over, right? Like, it's as simple as that. We talk about how, hey, these cycle leaders, the Nvidia, the Supermicro, the Broadcoms, they might not be the best place to be. Maybe
But
we
this one
need
is
to
much smaller than those. You think we should still have the same concern?
absolutely. The chart looks the same, right?
Okay.
This is one of those AI plays. This is in the AI basket with Nvidia and Broadcom.
And you're
Yes.
talking about like thematically too. If we saw, if this is a AI led bull market, if we saw those stocks that led us there, you're saying that's regardless of the market cap and how much
Listen.
weight they have.
If Supermicro breaks down, but then we can look at Nvidia and Google and Meta and Broadcom and Dell, and they're all fine. It's okay. But you want to make a list of the AI, just machines, right? Like the best stocks so far this cycle. Make a list and then just check the trend. And you want those trends.
Check it twice.
And you want those trends on balance, the majority of them, to remain intact and pointing up, right? Supermicro could break down, right, and be the only one, and all the others are still working fine. What we don't want to see is the dominoes start to slowly fall, and Nvidia prints a top, and then Supermicro's topping, and Dell is topping. These are what you would call the generals, right? These are the market generals this cycle. They got to hold up. I don't think they're going to continue to lead the way that we saw them lead in maybe the first half of this cycle.
Do we need them to?
I don't need them to lead. I don't expect them to lead, but I do expect and need them to participate and be trending higher.
And not be breaking down. Yeah.
Yeah. So you don't want to see these patterns break. But at the same time, like I'm getting in at this trade now twice above this VWAP, right? Trying to jump this breakout, buying this thing in the 900s, and then stopping myself out in the 700 or 800s. Like this is a wide range, right? And taking those losses starts to hurt a little bit. I'm done with this one. If I get stopped out again, so I'm going to keep it loose. If this little, red diagonal starts to go, I'll think about it. But I don't know. I don't love it. And I probably won't trade the same again.
Definitely looks like there's some anxiety between buyers and sellers, kind of, real stalemate there.
These trades get crowded too, right? Like there's sentiment here. We're like, I'm kind of in here in small size. We have a lot of clients who are interested in it. Like my dad likes this one. I don't care too much about it. People are trading it, but that's like information too.
Yeah, no, you're right.
You know what I mean? Like this, and it's just
when it hasn't done anything
this good.
Year, it really hasn't. I mean, I guess it made most of its progress maybe the first few months of the year, or the first few days of the year. But man, look at that thing. Pretty much since February, just sideways.
When a stock is this good, it attracts the masses, right? And then that means there are naturally going to be weak hands in it, and these things are going to happen more and more and more. I want the AI name that no one's talking about and no one knows about yet. Supermicro was that, I don't know, a year and a half ago now.
Right.
A little long in the tooth here.
All right, ready?
Yep.
Go on. We'll rip through a couple quick. Let's see. Donovan wanted to see XLG IWM. I think if it's the same Donovan, he shared a great chart of XLG IWM.
So that's the top 50 stocks in the S&P 500 relative
50 or 100?
Russell 2000.
Is XLG 50?
It's the top 50, right?
Yeah, you're right. So like the megas versus the smalls. But I'm
going to flip it. I'm going to look at IWM XLG if that's okay.
Makes sense, yeah.
Would want to see an overbought reading, right? After a surge like this. This is what's most important though. What do I have, a 5-day rate of change here? Yeah. I mean, look, we've never seen anything like this. 5-day rate of change is about 13%.
And it blows the prior records out of water. It's not even just like, oh, it's close.
Yeah, no.
What the heck?
So that means the performance gap between XLG over the trailing 5 days, XLG has been down, 1.6%, while IWM is up, that can't be right. IWM is only up 4.5%.
You got a 5-day?
I don't know what's going on with my rate of change indicator. But anyway, this just means that the margin in terms of performance between these two assets is completely blowing out of the water. You could look at something like this, like a momentum thrust. This is how new trends start, right? But when you look to the price chart here, this is not an uptrend yet. This is still a downtrend, right? Like
very much so.
This is the definition of a downtrend. So now what we need, because we got
that's what I mean. Like we spent the last almost 2 weeks talking about how strong small caps are. What if we just see that trend rip right back in the next few days where we just see mega caps make a really sharp bounce back. I mean, that's totally in the cards, right? The trend doesn't really change
I
that
would
much.
imagine, Pat, there's some sort of reversion from the trend that's been in place since last week very soon.
Yeah,
How
and
big
two
is it?
weeks
I
before
don't
this,
know.
we were talking about how weak, how incredibly weak small caps were. So
Yeah. So the follow through in terms of the small cap over like large growth trade has been crazy this week, right? Like there's been big follow through. But anyway, I think now you got the initiation. Now you got to wait for like some sort of a base to form.
and maybe a higher low
Um,
too. That's
yeah, I don't know. And let it like chop around, build out a base, and then maybe eventually we launch higher out of the base, right? Something like that.
I like it. Let's move on to some of these individual tickers. Nike, I'm 1 month out.
1 month.
1 month. That's it.
I mean, look, this is you're gambling. You're trying to catch a falling knife with a very, very short time frame. Basically, what you're saying is this is so stretched to the downside, right? And you can see it with the with the rate of change indicator here. This is worse than the COVID sell-off for Nike. However, I don't know where do you step in and buy this? You basically just have to like close your eyes and cross your fingers.
I think you'd have to wait for you'd have to wait for it to recapture those 2022 lows, right? And that's, I mean, that'd take what, like a 10% rally to get there? 20%? 15?
It'd be a good amount. It would be to rally back to the 2022 lows from here. That's around 83. Yeah, Pat, like 13%.
And then you
Back to
still
the
get
blue
that
line.
nasty gap to fill. I think the more likely thing here is it gets back there and bumps its head there and then makes a new low.
Listen, if this is a super cute trade and it's not, this is a rookie move. So, but if you're going to do it, at least do it responsibly. Here's how you would structure something like this. You're absolutely not involved below here, the pivot lows. Like absolutely set the stop. You want nothing to do with it. Don't wait for the close. If it breaches there, get the hell out. No questions asked. Okay.
A new
That'd be
one.
like a new decade-long low or something for Nike. I think, right, is terrible. Oh no, maybe not. On a relative basis, we're at decade-long lows, but still,
But still, I mean, COVID low.
multi-year lows. And then really, you're just looking for a quick hit here because every single trend on every time frame is against you, right? So like you're literally, this is the exact opposite of how they teach you to do it. So you want something really, really quick. So you can get long here at 73, out at the earnings day intraday high around 79. And if you're really, really, really greedy, you can maybe trade it back to, like Pat said, that 2022 low, right? Here at 83. Either way, I mean, 10 points of upside max. And you'd be risking 3 points to 2 points to the downside. It's tough. It's tough. I hate it.
I think there's a temptation to buy the dip on a lot of these, when you see that earnings gap, but a lot of times it takes a lot more than a month for the smoke to clear after a big ugly move like that, where you don't just usually get like this rip right back. It can kind of, that selling takes a while to kind of burn through before you get the rebound.
I got cute and started building a long-term position in Nike because I love Nike. Like I love Nike products and I love Michael Jordan. I love Tiger Woods. So I like it mostly for fun. Same way, like I own Titleist, ticker symbol golf. I like to just buy the things that I like and that I use. So I started building like a long-term position. I'd only done I'd only scaled into one tranche, so didn't hurt at all, but it absolutely blasted. This was right around here before earnings. I sold on earnings day. You get a candle like that, you look at the chart, there's just no reason to hold it.
Before the report, before the massive gap?
No, I sold this candle right here.
Oh, there you go. Yeah.
Down whatever it was, 15, 20%, like first thing in the morning. I want nothing to do with this.
Yeah, it kind of reminded me of like ASML. I had to do that yesterday, where I'd actually moved my stop up on ASML, but we got that nasty, nasty gap down. I hadn't gotten stopped out yet, but I was just like, I'm going to pull this because you have that downside momentum thrust all of a sudden. That attracts, that gets the sellers out, and that takes a while to kind of
it really does.
They get exhausted.
Yeah, you don't want to sit around, let it kind of find its footing.
Do I sit here and wait 4 more days till I get stopped out, or do I just cut it here? You know what I mean?
Just cut it. Move
like,
on with your life. It's also
right.
just bad for like the psyche to
Yeah.
sit in positions like that. Just
Yeah.
get rid of it. Get it out of your account. You don't want to look at it anymore.
Yeah.
What's next?
All right, let's do. We got a couple for CMG here.
I'm
Nick,
taking
what-
2 more. It's a fast market. I got trades to make, folks.
Okay, all right. Let's do CMG. And then Jason wants to see PAA. We'll look at that one after.
Pipeline? Yeah, no, you can't own the Chipotle here. See ya.
Yeah, I mean, it hit its target.
So we marked this one up, Pat. Hold on. We marked this one up a few weeks ago. I remember it. And this is exactly how we marked it. And we were probably saying like really nice things about it. But we were probably mentioning that we overshot the last target and then we're printing the short-term top. So we drew these 2 red lines, right?
Mhm.
Since we did all this was probably like back around here in the upper 50s when we talked about this. We have broken pretty much every level of support that we drew on this chart.
Yeah.
Okay. So short and intermediate term, this is a no. Long term, you can see the 200 here, right? Still sloping steadily higher. Long term, maybe there's something there. So how would we play it? First of all, if this were to scoop and score and undo this top all day, that is the ideal situation, right? What do I mean by that? This thing just kind of stops and reverses, makes a tradable low right here. That's just a shakeout. And then we scoop and score. We trap the bears down here and we're somewhere back above 55. And then we start moving back towards this 261.8. That's what we really want. If we don't get that, I think you could start to rethink things down here, this 161.8. But just like we were saying about the last one, like let it settle at this point. You know, look at what Chipotle has done over the past couple of weeks, 70 to almost 50.
Yeah, and if you have to try that hard to find support, if you keep adding things like that, that's information too, right? Maybe
Yes.
we shouldn't be looking for support.
This one, you got to let the dust settle. This is exactly the point you were just making about the last one, Pat. This kind of downside momentum brings more bears out, right? That's where Chipotle is out right now. Kind of has to stop the bleeding before I think we want to think about entering it.
I like it. So actually, could we do 2 more? We'll do WIT real quick and then PAA, and then I'll cut you out.
WIT.
Yeah.
Nice base. I don't know if this one has a heavy short interest or if it's just a highly speculative stock. But here's the thing. The base looks like a lot of things that we see in speculative growth these days. The base looks a lot like the base out of the Russell 2000 that we're coming out of, just with a much steeper drawdown, right?
Yeah.
During the bear market. But the base is in, right? And then you got this pivot high here. I think we've just got confirmation. It certainly looks to me like we're above any WAP here. Yep. So we're above the VWAP from the prior cycle high. Everything's looking good. I think we're going to have some fib retracements that could help us out in terms of picking our spots. Middle of the range. Yeah, so tough. Look, I think you want it. This 38% is great, right? Because we got a couple touches here. The market has told us, oh, look. The market has told us this level is a big one. Right,
Yeah.
Pat?
Yeah.
See, like even this stuff from back here.
I like how you said it. The market's telling you.
Yeah, this 650-ish zone, that's how I would really want this one, right?
Yeah.
Like, ideally, look, the market's absolutely ripped. This thing's gone from 5 to 7.
Would you buy a retest? I mean, a retest.
Yeah, that's exactly what I would want. This is what I would want it to do. Boom. And then we could
be out here. Like where would you be a buyer up until on a retest?
6
to the downside. Like when would you stop?
6.25.
Okay. Seems reasonable.
Yeah, 6.25.
And
then
you're
you're
playing
looking
it
for
back.
something like this. That would be great. And then target 780, next stop 990.
Not bad. Not bad. I like what you said about how it kind of just looks like a more volatile Russell, basically.
Yeah, the trend is up.
So let's check out PAA. I know we got
All American.
there's a bunch we didn't get to. Hive,
I'm in Hive. I'm long Hive.
MSOS.
Look, Plains is good. Pot stocks, no, we're not gonna do that. How about this? Look at that. This is so clean. I think this is my favorite chart today because you have, yeah, I'm going to pick this as my favorite today because
Okay.
we have this little multi-month consolidation breaking higher today. So this one is actionable right here, right now. Sweet candle, taking out the pivot highs from early April, as well as the pivot highs from just, early
Little
last month,
2 week base there
early
too,
this
like a
month.
little 2 week candle there.
A little what?
Little like 2 week candle.
Yeah.
You see what I'm saying? Like the tiniest little base.
Where? Oh, right here.
Yeah.
Yeah. Right. So we like look at these fractals, right? We're coming out of all these little patterns at the same time. Also, when you zoom out, I mean, this level was big too, just to point out. Like,
Is this an MLP? This
yeah.
is
Yeah, it's going to pay you a sweet dividend too. This one's got a big boy yield, 6.2. Bang. But look at how big this level is too. Like where all of this is happening. So this chart, like this polarity zone this is as good as it gets, right? Going back 10 years. 19 is your level. And if I'm getting long at 19, I'm probably holding on until 35, 50.
And I got to tell you, man, it's a solid week for energy stocks.
Yeah. Yeah. I think energy is about to blow this range out.
Just when everyone pronounced it dead.
That's right. And if, God forbid, they do, right, and you see XLE back above this shelf of highs, back above the WAP now, got that alert.
Yeah, I mean, look at that. Like, look how early that channel is. The last like 2-3 months.
Oh, this channel, it's fantastic.
Yeah, we just busted out of it this week.
I love it. Yeah, dude, I think energy, we're just about there. We're just about there.
Where does that fit into the whole small cap value type rotation? Or is it its own animal because it's energy?
It does fit in. It's very much a part of it. A lot of people will say it's its own animal. I respect all those opinions, but I don't really think it is all the time. I think energy trades with other cyclical and value sectors a lot of times. Sure, we have these market environments where like energy is the only thing that's red and everything else is rallying, and then energy is the only thing that's green and everything else is rallying. Look at a chart of energy off the pandemic lows, and then look at something like materials. These groups have done more or less the same thing, right? It's the commodities trade. I think energy and materials are more likely to work in an environment where industrials and financials are leading, right? Because that is speaking to that value and cyclical rotation. So energy stands to be a beneficiary of all these themes that we're talking about since last week, I think also. I think that would make sense. And the base metals, the industrial metals, a lot of the material stuff, same thing. Like Steve, I'm out here buying steel stocks, coal stocks.
I know I told you we were done, but you got to look at this one, ONGC. And it fits with what we're talking about. ONGC. So this one in the chat.
But this is a fund, Pat, isn't it?
Oh, okay. He says energy giant from India. Is it?
Yeah.
Okay.
Oh, yeah. Okay. So this is in rupees. There you go. That's why it's.
Oh, that's why.
Yeah. Wow.
Structurally, though, it looks
beautiful
nice.
Chart. Look at that. Oh, so good. Beautiful. Yep. The best energy companies tend to be overseas. Here's one of my favorites. Canadian Natural Resources.
Hey.
So good. Imperial Oil is another good one. Like, look at these bases, man.
Wow.
Canada's got some good stuff too. So yeah, I'm all for the, energy stocks of other countries. I think that's a good way to diversify a portfolio also.
I like it. Well, we got to a lot. There's a couple we didn't get to. I don't think we hit MSOS. We didn't hit FANG or Exxon. We kind of hit those, but yeah, hit for the most part. What was your favorite today?
The one that we just talked about, the PAA.
I think I'm gonna have to go with either Cash or Generac. I think they're very different trades.
We had a lot of good bases today. I like the base in something like WIT. Probably not my.
I gotta tell you, after the last few weeks and how extended things should be, or I didn't expect to see too many setups that are actionable like now. Yeah, but those are looking good.
Yeah.
Not too expensive.
Great request. Listen, I think this show is only going to get more and more fun because most of the charts that we're going to be looking at in the future, I think, are going to be looking pretty good with breadth expanding. So come bring more ticker requests next week. Pat, any closing remarks?
No, this is I love doing this show. Every episode gets even more fun.
Thank you, everybody in the chat. As always, we couldn't do the show without you. Join us again for the next episode of Chart Request Live, Tuesday, 1 o'clock Eastern Time. Might have a special guest on the show. Might have a special guest. In the meantime, morning show every morning, 8:30 to 10 o'clock Eastern Time, right here on Stock Market TV. Thanks for joining us, everybody. Have a great day.
Cheers.
Peace.